Good morning, everyone. Welcome to Traders 20 on ET Now. I'm Megha Chadha.
Hi, everyone. I'm Ava. And the Bash, it's a jam-packed show lined up. Well, Traders 20, this is the show where we're going to get you a daily dose of 20 fresh stock trading ideas so that you can have a profitable trading day. Our technical experts will be with us so that you can get some of the most exciting bets in the markets.
And as always, along with all those equity trading ideas, we'll also be showcasing commodity picks as well as strategies that would help you make the best of the futures and options markets. So let's get started. But of course, first introduce the 6 technical guests who will be with us on the show. We've got Mitesh Thakkar, Shrikant Chauhan, Sandeep Wagle as well as Prakash Gaba. All of them, of course, joining in from Mumbai, as is Saumil Mehta. And lastly, we'll also have Deepak Mohani joining in from Pune.
Straight to the equity markets then, and it's not a great day of trade, so to speak. You've got the markets which are grinding under pressure. So as we speak, at 6,017, close to the lowest point of the day. The Sensex is below 20,000 and 19,917, and an abysmal market breadth. It's largely the sell-off in real estate stocks as well as auto stocks which is responsible for the kind of crack that you're seeing. HDIL in particular needs to be brought up on your screen. Remember, it has cracked significantly on account of pledge share concerns. As we speak, is at the lowest level since September 17th, well below its daily moving averages at 78.3. But aside from that, from the large caps, you've got Tata Motors down and out on GLR concerns. GAIL India, M&M, Jaiprakash Associates not showing you any relief. Sesa Goa, Ranbaxy, Reliance Infrastructure, as well as BPCL, Tata Power and Hindalco are some of the other counters down and out. On the gaining side, though, take a look as to how ONGC is panning out on account of the cabinet nod for the price hike. You've got TCS as well as Wipro and ITC, which are holding up in the session. Apart from that, Dr. Reddy's, Infosys, some of the other counters gaining traction. But on that note, it's time to get on board our technical experts to assess the markets for us and find out their trading recommendations. Here's that quick disclaimer. Please do remember to consult your financial advisor if at all you will be taking on board any recommendations. Joining in on the show right now is Mitesh Thakkar as well as Shrikant Chauhan. Thanks very much, gentlemen, for joining in on the show. Mitesh, I'm going to start off with you. Is the selling pressure going to continue, and what's the stop loss and target that you'd have on Nifty? And in light of that, what are your trading recommendations?
I think yes, the Nifty has given some kind of a short or a minor breakdown on the intraday chart. So we are not looking at big sell-off happening, but I think a situation wherein some kind of profit taking happens at higher levels, and the index is just down 1% from its recent highs. I think we'll possibly see some more downward grind happening, and I think 5950 could be tested on the downside. So it's a slightly negative bias with a short-term corrective kind of setup. Also is the fact that the breadth has turned negative. Yesterday we had 1:4 advanced decline ratio. Today I think we have 1:5. And the mid-cap stocks in the high beta sectors are also going through a severe profit booking bout. So I think in the short term the bias remains marginally negative. Though I think because of the index composition and some kind of sectoral rotation, we will not see big cuts happening on the Nifty. Today I have identified 3 sell calls, which is to begin with an IDFC, which can be sold with a stop at 172.5 for a price target of 156. It's broken below all its key short-term 10-20 day averages. The setup is clearly negative, so this one is a sell call. A similar kind of pattern has emerged in Aurobindo Pharma, where we also have a price pattern formation in terms of a head and shoulder bearish top. It's just breaking below those levels, so can be sold with a stop at 188 for a price target of 172. A Century Textile, which has given fresh sell signals, can be sold with a stop at 413 for price targets of 385. And finally, only buy on TCS, and the CNX IT index is one of the sectors which is doing well in this kind of choppy market. TCS can be bought with a stop at 1308 for a target of 1380, as we have seen some strong intraday buy signals on the charts.
Okay, 3 shorts and 1 solitary long recommendation coming in on a TCS. And selling pressure clearly looks like it's here to stay, because Shrikant, you've also got 2 out of 3 ideas that are on the short side.
Yeah, absolutely. Like in this market, we have seen almost all the second liner stocks are showing a lot of distribution kind of pattern, and specifically if you go through with the select trend of DLF, then on intraday charts the stock is forming very clearly head and shoulder kind of pattern. This similar pattern we have seen in Unitech from Anantaraj also. So I think in my sense the stock is just below its neckline support, so we can trade short at current levels with a target of select 235 on the downside with a stop loss of 253 on the high side. LIC Housing is also showing the similar kind of formation, and the important part is that the stock is forming this particular head and shoulder kind of pattern at the top of the rally. So from here, this one is also a sell with a stop loss of just 280 on the higher side, and we can keep a target of 265 or 263 on the downside. As Mitesh said, yes, the markets are like just down by 0.5% or so like 0.25%, but overall like there are like some stocks which certainly we can buy on say like supports or at decline, and in that Tata Global is very close to its support area of 140, 145. So at current levels we can look for adding this particular stock long with a stop loss of 138 on the downside, which is 50% retracement of the entire rise, and we can keep a target of 160, 162 maximum on the high side.
Okay, sell DLS, sell LIC Housing Finance, and buy Tata Global Beverages. That's the word of advice from Shrikant. Well, let's nail down some individual stock queries that you have sent in. The first query comes in as an email on BHEL. Well, Sajid has sent this email in saying that he's bought 500 shares of this counter at an average of 280 rupees per share, and now he wants to know if he should hold or sell with a long-term time horizon of the next 1 year. Mitesh, what would you advise him?
See, I think one, that's a blue chip stock. It's one of the key capital goods stock in the country. I think today he also has got a slightly wider horizon, so I would not advise to exit at these levels. My sense is that around the 200-210 mark, the stock has formed some base, and I think if it kind of goes and retests those levels, I think those will be good levels to buy more. So I would suggest advise buying more on declines to levels of 210. My sense is that will kind of bring his average price down to about 240, 245, and the stock should, in the next 9 to 12 months, should at least give one rally to about levels of 300 plus, which could be good exiting which could be good exit area.
Okay, so Sajid, look at averaging out your investment at levels of around 210 odd. Away from that, let's take up the next query for the day. This one comes in on a United Breweries. We've got Gopal Thakur on the line with us from Vadodara. Mr. Thakur, hi. Thanks very much for being with us. And give us some more details about your holding in United Breweries and what you want to do. Okay, we don't have him with us, but it's been via an SMS. Now let's take you through his query then. He's got about 50 shares of United Breweries at a price of 954 rupees a share. And now he wants to know whether he should hold on or book his losses. Mitesh, what would you advise?
So I think if you look at the price chart of UBL, it went up from levels of 375, 380 in December 2011 to about levels of 960 in December 2012. So it's had a 1 year of up move or a bull market, and the stock is now broken down, going through some kind of correction. My sense is that he should try and exit it out on pullbacks to about levels of around 800 to about 820. I think that's the area where the stock can give a pullback because it's already corrected a bit. But otherwise, the stock clearly has had a very strong up move and will take a lot of time going through a price as well as time-wise correction. So I think no point in holding this stock, especially given the fact that I believe his holding horizon is about 2 to 3 months. So I think any rallies on the trading side to about levels of 800, 820 should be used to exit.
Alright, that's the word of advice coming in on UB Holdings. Hope we got your query answered. Well, our last and final query for the day comes in the sugar space on EID Parry. We've got Mr. D.D. Mangal who is joining in on the phone line from Chennai with his query on the same. Hi Mr. Mangal, good to have you with us on the show. What's your query?
Good morning. I have purchased 2,000 shares of 235 EID Parry last 2 months. From that day onwards, the market is coming down. Is there any negative report about the company? Shall I hold the stock? My time horizon is 1 to 2 months.
Mitesh?
Yeah. See, I think this stock has been clearly going through a downtrend for the last 6 to 7 weeks. I think 169, 170 is a very strong support area. Now, since he has missed, putting a stop loss earlier at higher levels, I think 169 should be his stop loss level from current position. And I think, the stock is also close to getting oversold. So maybe it will give a bounce back sometime in near future. Though the sectoral charts are not very positive, and therefore I would advise exiting on this kind of bounce back. 200 to about 205 is the area where I think you should exit it out on any kind of technical rallies.
The word of advice coming in on EID Parry. Mr. Mangal, you should look at booking your losses, but probably at slightly higher levels. But a disclaimer once again and a reminder to all our viewers that if you act on any of the advice that's been given on the show, please consult your investment advisor before doing so. Well, we've got the benchmarks bleeding, of course, quite heavily. The selling pressure is more pronounced actually on the broader end of the market. We've got the mid-cap index that's down by almost 2% right now. And what's leading it lower is an HDI clearly. The stock, remember, is under pressure because of possible cash crunch at the company level as well as pledged shareholding concerns. IRB Infra also is down by about 5%. Unitech, Hexaware, M&M Financial and a Gen Irrigation, high beta pocket really that's under the maximum selling. And it's just about 6 stocks that are in the green on the mid-cap index right now. That's Tech Mahindra, Godrej Consumer that are at least supporting it a bit.
Okay, Sandeep Wagle and Prakash Gaba, they're standing by with their top trading recommendations list. Sandeep, going to start off with you. What are you recommending?
Well, I've got all 3 sells in this market. I think every bounce back as a trader, one should go short depending on the stock that you are in. There are some stocks which are showing strength. Some of the IT stocks are showing strength. But I would prefer to go short because the sentiment is very clearly down. I have a sell in Century Textiles which has broken down the swing low and multiple supports. So sell with a stop loss of 407, target of 390. The second one is a sell in IDFC, stop loss of 170.50, target of 163. A breakdown of a head and shoulders pattern in the daily chart. So this move should come in over the next 2 to 3 days. Century also should come in over the next 1 to 2 days. And a sell in M&M, stop loss of 868, target of 820. A breakdown from an inverse flag. This move should come in over the next 2 to 3 trading sessions.
3 shorts, Century Textiles, IDFC and Mahindra and Mahindra Financial. Mahindra, pardon me. Prakash, you've also got 3 shorting ideas. Tell us about the stocks that you've identified.
Textile structure looking weak. It's got tired in the upper regions. It's broke down structure. It should slide down to levels closer to 390. Only thing is I'll have a slightly deeper stop of 410 and trade the short side. Second stock that is weak, looks weak to me is Idea. Looks like it's getting more exhausted in the upper regions. I would have a stop of 119, 120 zones. That's the place where it's come down from. And I think expect it to slide down to levels closer to 112. So Idea also seems like a sell as well. And third is the IFCI. That looks like typically a breakdown structure out there. It's broken down around 37 zones or so. I would have a stop below 30, about 36, and trade the short side. Can it come down to levels closer to 33? Yes, that looks like it can come down to levels closer to 33 or even 32.50 or 32 in the days to come. So even IFCI looks like a sell.
Okay, so our technical experts clearly shorting quite a few stocks in the markets today. Well, it's grinding lower for the broader markets as well, so they're not being spared in today's carnage. Off by close to 0.6% for the, pardon me, 1.5% for the broader markets as we speak. Some big losers, A to Z Maintenance, Shivani Oil and Gas Exploration, that's one's down by close to 7.5%. Pradeep Overseas, Sequent Scientific also under a fair bit of pressure. Orbit Corp, Saskin Communications, Ajmera Realty, and the list is really endless.
So it seems to be selling across the board. So let's find out what are the next set of ideas that you could look at. We've got Saumil Mehta and Deepak Mohani joining in now. Saumil, start with you and the 3 shorts that you've got for us.
Overall, the market looks negative now, so I have all 3 calls on the short side. First call would be on Jindal Steel. Jindal Steel has just broken down from a bearish triangular pattern on the daily charts. The momentum indicator on the hourly and daily both are on the sell side. So I'll look to go short on this stock for a target of 380, and the stop loss would be 435. The second call would be on PTC India. It has forming a ending diagonal pattern. It has broken down today, and I'll be expecting a good medium-term correction on this stock for a target of 65 and a stop loss of 80. The third call would be on Unitech. Unitech has also been forming a small small ending diagonal pattern on the daily charts, and it has broken on the downside. It has been started forming a low top, low bottom on the daily charts. The momentum indicator is on the sell side, daily and hourly both. So I would like to go short on this stock for a target of 28, and the stop loss would be around 38.
Okay, so those are some shorting candidates from Saumil, but Deepak, looks like you're sticking your neck out and buying some stocks in this market.
2 of them, there is a short sale as well. Essentially the buys are in stocks which are going up against the tide. So even if you have a small intraday reversal in the index, that could give them a further boost, even if they don't manage one by themselves. Tata Steel is the first of these buys, stop loss of 405, target of 462. It has been in a 3-week downtrend, but seeing the sort of move we are today, that downtrend may be coming to an end now. Tech Mahindra, stop loss of 972, target of 1026. The tech stocks are generally doing quite okay now. This is corrected for 3-4 days, making a strong move today. This also could be the beginning of an upswing for the stock, worth taking that position. The one short sale is an intraday trade, Oriental Bank, stop loss of 326 and a target of 315. This is still in a downtrend, not coming out of it like the other two stocks, and it is at a session low, so this is a day trade on the short side.
Okay, so Deepak's got, in fact, a couple of buying recommendations as well for our viewers. But with that, of course, we wrap up the equity side of the markets and get you a glimpse of what's happening with commodities as well with Manisha Gupta, our commodities and currencies editor. Manisha, hi, and it seems like selling is not sparing the commodities market either.
Well, clearly yes, but today is a day of consolidation, especially after the IMF saying that the global GDP forecast has been cut to 3.5% from 3.6%. That has led to some profit taking. It also has to do with the US voting, which has temporarily suspended the borrowing limit. So these are a couple of things that the markets are not too sure about, and you have seen some decline coming in. Starting with gold, and that has seen a bit of a downtick as well. You have seen a lower interest rate and quantitative easing continue to boost the prices, but there also is a report out from Morgan Stanley, and they have revised the downward revision for 2013, with average now standing at $1773 per ounce for the whole of 2013. Some decline in crude as well. Yesterday we were trading at 96.5, 95.5 on your screens there. The increase in US inventories is one thing that also is putting pressure onto the prices. Same is the case with base metals as well. We saw strong gains for the most of this week, but bit of a decline coming in for copper prices right now, off its 1-month highs that we were trading in the markets yesterday. But some strength has continued in case of the lead prices because of strong Chinese demand that has continued there. How do you trade all of those commodities then? For that, let's get in Dharmesh Bhatia from Kotak, and he joins us to tell us about his strategies. Dharmesh, hi, let's start with crude first, and the strength that we have seen most of this week has led to some profit taking in the markets today. At these lower levels, how would you want to trade the commodity?
Crude oil, which is continuously showing firmness. Internationally also, market is holding around $95. And with NYMEX and Brent crude spread getting shrinker almost $15, I'm expecting that spread to come to almost $10, which will help eventually the domestic market. I'm expecting the price holding around 5,000, which is a very good psychological support. And until that level is breached, I will not suggest you to go short. Any decline towards 5130, 5120 is a very good level to accumulate, maintaining a stop loss of 5050 or 5040, and you can hold long for a target of around 5210 to 5250 level, which is a previous stop. So buying on dips on crude oil is advisable.
Dharmesh, also what's your sense coming in for lead, because the immense cold in China is leading to a lot of battery demand, and that really has been supportive for this commodity.
After the sharp decline, a pullback rally is seen, and this rally could continue towards the major psychological level of 130 level. So any decline towards 125, 124 is a good level to accumulate, maintaining a stop loss of 123, and you can hold on for the target of 129 to 130. About 130 you can see a speculative rise, so any decline is a good level to buy. So buying on dips on lead is advisable.
All right, Dharmesh, I appreciate you taking time out. So that's the two commodities views coming in from Kotak, both buy on crude and lead as well. With that, it's back to you, Avan.
Thanks very much, Manisha, for pointing out all of those commodity trading strategies. Remember, commodities too reeling under pressure today. But here's that quick disclaimer once again. Please do make sure that you consult your financial advisor before taking any positions in the stocks recommended. I'd like to take time out then to thank all of our 6 technical experts for joining in on the show. Gentlemen, it was a pleasure having you with us.